Based on the historical data and forecast, Bitcoin shows a slight upward trend, consolidating between the support of $64,100 and the resistance of $66,600. The RSI fluctuates between 45.8 and 61.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Given the current RSI of 53.4 and the forecast prices hovering around $65,300 to $65,500, I recommend a moderately bullish strategy. We will enter a long position at $64,900. The stop loss will be placed slightly below the support level at $64,100, setting it at $63,800 to mitigate potential downside risk. The initial target price will be the resistance level of $66,600. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, we will consider raising the target price to $67,000. Conversely, if the price touches the lower Bollinger Band, it signals a potential oversold condition, and we'll re-evaluate the position. This combined RSI and Bollinger Bands approach provides a dynamic and adaptive strategy for maximizing returns while managing risk. This strategy will be adjusted daily based on the RSI and Bollinger Bands. Based on the historical data and forecast, Ethereum exhibits a slightly upward trend, with price fluctuations within the range of $17.90 to $19.30. The RSI indicates that the asset is currently neither excessively oversold nor overbought, fluctuating around the 60 level. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper band, suggesting potential resistance at $19.50. Considering these factors, I propose a strategy combining RSI and Bollinger Bands to capitalize on short-term price movements. My strategy involves entering a long position when the price touches the lower Bollinger Band and the RSI dips below 40, signaling a potential oversold condition. For example, if the price reaches 1870 and RSI is 38, enter a long position at 1870, set a stop loss at 1850, and target a price of 1900. Conversely, if the price touches the upper Bollinger Band and the RSI exceeds 70, indicating an overbought condition, consider a short position. If the price reaches 1950 and RSI is 75, enter a short position at 1950, set a stop loss at 1970, and target a price of 1930. This combined approach aims to maximize returns by exploiting both momentum and volatility signals. Based on the historical data and forecast, BNB demonstrates a slightly downward trend with increased volatility. The RSI consistently remains below 80, indicating the asset is not overbought, but also rarely reaches below 20, suggesting it's not deeply oversold. The Bollinger Bands show that the price is currently near the lower band, indicating a potential for a short-term bounce. Considering these factors, I recommend a moderately bullish strategy focusing on short-term gains. We will enter a long position at $566, placing a stop loss at $561 to protect against further downside. The initial target price will be $574, aiming to capture a quick profit from a potential bounce. To optimize returns, we'll implement a dynamic strategy adjusting our position based on RSI and Bollinger Bands. If the price reaches $574, we'll move the stop loss to the entry price of $566, securing a risk-free profit. If the price continues to rise, we will set a second target price at $582, capitalizing on the resistance level. If the RSI approaches 80, we will consider taking partial profits and tightening the stop loss to preserve gains. This approach balances risk and reward, allowing us to benefit from potential short-term price movements while protecting against significant losses. Based on the historical data and forecast, XRP shows a sideways trend with price fluctuations between the support of $1.09 and the resistance of $1.11. The RSI fluctuates between 40 and 60, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. The forecast for the next week predicts a slight downward pressure, with prices hovering around $1.1 to $1.07. Therefore, I recommend a cautious strategy focusing on short-term opportunities within this range. My recommended strategy is to implement a range-bound trading approach. Enter a long position at $1.09, setting a stop loss at $1.07 to protect against downside risk. Target a profit at $1.11, capitalizing on the resistance level. If the price breaks below the support of $1.09, consider a short position with an entry price of $1.11, a stop loss at $1.13, and a target of $1.09. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows a downtrend in the recent week, with the forecast prices indicating a continued decline. The RSI consistently fluctuating around the mid-range suggests indecision, but the recent dip towards 46.7 indicates a potential oversold condition. Considering the support price of $75.5 and the forecast prices, I recommend a long position strategy when the price reaches $74.3. Set a stop loss at $73.4, just below the bottom of the Bollinger Bands, to mitigate potential losses. The initial target price is $78.2, near the recent resistance level, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks below the lower band and the RSI is below 30, it confirms an oversold condition, strengthening the buy signal. If the price rebounds and touches the middle band, consider adjusting the target price to $78.1. This combined approach, using both RSI and Bollinger Bands, offers a balanced strategy to capitalize on potential rebounds while managing risk effectively. The final portfolio will be a long position at $74.3, with a stop loss at $73.4 and a target price of $78.2. Based on the historical data and forecast, TRON shows a sideways trend with price fluctuations between the support level of $0.315 and the resistance level of $0.332. The RSI fluctuates between 44.4 and 56.4, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the current RSI around 53.6 and the forecast predicting prices around $0.327 to $0.33, I recommend a long position strategy. We will enter a long position when the price touches the bottom of the Bollinger Bands, which is currently around $0.322. The stop loss will be set just below the support level at $0.314 to mitigate potential losses. The target price will be set at the resistance level of $0.332, aiming to capture a potential upward movement. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will enter a long position at $0.315 with a stop loss at $0.313 and a target price at $0.33. Conversely, if the RSI exceeds 80, indicating an overbought condition, we will consider a short position, but given the current sideways trend, this is less likely. The combined strategy prioritizes long positions when the price approaches the bottom of the Bollinger Bands or when the RSI indicates an oversold condition, maximizing potential gains while managing risk with well-defined stop-loss levels. The portfolio will be 60% long TRON and 40% in stable coins to reduce overall risk. Based on the historical data and forecast, Dogecoin demonstrates a downtrend. The price has been consistently approaching the support level of $0.06. The forecast for the next week projects further decline, with prices ranging from $0.0698 to $0.0641. The RSI consistently hovers below 50, indicating a bearish sentiment. Considering these factors, I recommend a short selling strategy. The entry price should be set at $0.0698, coinciding with the initial forecast price. A stop-loss order should be placed at $0.073, just above the recent high and the center of the Bollinger Bands. The target price should be $0.0641, aligning with the lowest forecast price. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. However, given the existing downtrend, I prioritize the RSI and forecast data. The RSI is currently at 31.9, indicating an oversold condition, but not strong enough to reverse the trend. Therefore, the short position at $0.0698 with a stop loss at $0.073 and a target of $0.0641 remains the most efficient portfolio. This strategy aims to capitalize on the projected downward movement, minimizing risk with a well-defined stop loss and maximizing potential profit with a target based on the forecast. Based on the historical data and forecast, Zcash shows a volatile trend with periods of both upward and downward movement. The support price consistently remains at $463, while the resistance fluctuates. The RSI values range between 50 and 65, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands demonstrate significant price fluctuations, with the price frequently touching or crossing the upper and lower bands. Considering this, I recommend a combined strategy utilizing RSI and Bollinger Bands to capitalize on short-term fluctuations. My proposed strategy involves a combined RSI and Bollinger Bands approach. We will enter a long position when the price touches the lower Bollinger Band and the RSI is below 40. For example, on July 10, 2026, the price was $371, and the RSI was 58.6. However, since the RSI is not below 40, we will wait for a more suitable opportunity. When the price touches the lower band and RSI is below 40, we will enter a long position at $463, set a stop loss at $455, and target a price of $508. Conversely, we will enter a short position when the price touches the upper Bollinger Band and the RSI is above 70. For example, on July 17, 2026, the price was $572, and the RSI was 65.4. However, since the RSI is not above 70, we will wait for a more suitable opportunity. When the price touches the upper band and RSI is above 70, we will enter a short position at $508, set a stop loss at $518, and target a price of $498. This combined strategy aims to leverage both momentum and volatility for potentially high returns. Based on the historical data and forecast, Chainlink shows an overall upward trend, consistently staying above the support price of $8.02 and approaching the resistance price of $8.67. The RSI fluctuates between 51.6 and 64.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $8.49, placing a stop-loss order at $8.02, just below the established support level. The initial target price will be $8.58, aligning with the recent peak of the Bollinger Bands and a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will enter a long position at the prevailing price with a stop loss at $8.02 and a target price of $8.58. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider exiting the current position or shorting Chainlink. The forecast data indicates a consistent price increase over the next week, further supporting the long position. We will adjust the target price to $8.67, the resistance level, as the price approaches it. This portfolio combines technical indicators and price action analysis for a robust investment approach. Based on the historical data and forecast, Cardano shows a slight upward trend. The price has been fluctuating within the support of $0.166 and a resistance of $0.184. The RSI indicates that the asset is currently in a neutral range, with values fluctuating around 47 to 55. The Bollinger Bands suggest that the price is approaching the lower band, indicating a potential oversold condition. Therefore, I recommend a long position entry at $0.162, with a stop loss set at $0.158 to mitigate potential losses. The initial target price should be $0.174, aligning with the recent resistance levels. To refine the strategy, I suggest incorporating RSI signals. When the RSI falls below 20, it signals an oversold condition, providing a strong buy opportunity. Conversely, an RSI above 80 suggests an overbought condition, indicating a potential sell signal. Considering the forecast for the next week, with prices hovering around $0.165 to $0.167 and the RSI approaching the oversold level, I would adjust the strategy. Enter a long position at $0.163, set a stop loss at $0.161, and aim for a target price of $0.174. This approach combines Bollinger Band's insights with RSI confirmation, creating a robust strategy for high returns. Based on the historical data and forecast, Quant exhibits a downtrend with decreasing momentum. The price has consistently traded within a range between $62.4 and $65.9, with the RSI fluctuating between 39.1 and 50.3, indicating periods of oversold and overbought conditions. The forecast for the next week projects a continued downward trajectory, with prices potentially reaching $62.9. Considering these factors, I recommend a short selling strategy targeting a gradual decline. Our entry price will be $64.2. The stop loss will be set at $65.9 to limit potential losses if the price unexpectedly reverses. The initial target price is $63.2, aligning with the forecast for July 24, 2026. We will then adjust the target price to $62.9 based on the forecast for July 30, 2026. The RSI suggests that the asset is approaching oversold territory, and the Bollinger Bands confirm the downward trend. This strategy aims to capitalize on the current downtrend while incorporating risk management measures through strategic stop-loss placement. Based on the historical data and forecast, Injective exhibits a generally upward trend, consolidating around the 5.11 support level. The RSI fluctuates but largely remains within the 45 to 60 range, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show recent price action hugging the upper band, suggesting bullish momentum. The forecast for the next week predicts a stable price around 5.21 to 5.26, reinforcing a continuation of the upward trend. Therefore, a long position strategy is recommended, capitalizing on this momentum. I propose a strategy with an entry price of $5.22. Given the recent price action near the upper Bollinger Band, a stop loss should be placed just below the support level at $5.11. For the target price, I suggest $5.38, aligning with the recent resistance levels and providing a reasonable profit margin. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach. If the price breaks below $5.11, exit the position immediately to minimize potential losses. A second strategy would be to enter at $5.21 with a stop loss at $5.18 and a target price of $5.3. Combining these two strategies will increase the probability of success. Based on the historical data and forecast, TRON shows a sideways trend with price fluctuations between the support level of $0.315 and the resistance level of $0.332. The RSI fluctuates between 44.4 and 56.4, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the current RSI around 53.6 and the forecast predicting prices around $0.327 to $0.33, I recommend a long position strategy. We will enter a long position when the price touches the bottom of the Bollinger Bands, which is currently around $0.322. The stop loss will be set just below the support level at $0.314 to mitigate potential losses. The target price will be set at the resistance level of $0.332, aiming to capture a potential upward movement. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will enter a long position at $0.315 with a stop loss at $0.313 and a target price at $0.33. Conversely, if the RSI exceeds 80, indicating an overbought condition, we will consider a short position, but given the current sideways trend, this is less likely. The combined strategy prioritizes long positions when the price approaches the bottom of the Bollinger Bands or when the RSI indicates an oversold condition, maximizing potential gains while managing risk with well-defined stop-loss levels. The portfolio will be 60% long TRON and 40% in stable coins to reduce overall risk. Based on the historical data and forecast, Compound shows a generally upward trend with consistent support around $17.3 and resistance near $18.1. The RSI fluctuates between 44.8 and 55.1, indicating periods of neither extreme oversold nor overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a strategy that combines RSI and Bollinger Band signals for enhanced precision. We will initiate a long position when the price touches the support level of $17.3 and the RSI is below 50. The entry price will be $17.3. To mitigate risk, set a stop-loss order at $16.8, just below the recent swing low. The initial target price will be $18.1, the resistance level. To refine the strategy, we will use the Bollinger Bands for confirmation. If the price touches the support level of $17.3 and the RSI is below 50, and the price is near the lower band, it strengthens the buy signal. If the price breaks above the upper band, consider taking partial profits at $17.9 and moving the stop loss to the center of the Bollinger Bands, currently around $17.1. The final target price remains $18.1. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Falcon Finance shows a slight upward trend. The price has been fluctuating within a defined range, with support at $0.0602 and resistance at $0.0613. The RSI indicates that the asset is currently in the oversold territory, with values generally below 50. The Bollinger Bands show that the price has been approaching the lower band, suggesting a potential bounce back. Considering these factors, I recommend a long position strategy with a focus on capitalizing on short-term price movements. My strategy involves entering a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Specifically, I suggest entering a long position at $0.0599. Set a stop-loss order at $0.0597 to limit potential losses. The target price is set at $0.0605, aiming to capture a quick profit as the price rebounds from the oversold condition and tests the resistance level. This strategy combines RSI and Bollinger Bands to identify high-probability entry points and manage risk effectively, targeting a conservative but achievable profit within the established trading range. Based on the historical data and forecast, MORPHO demonstrates a slightly downward trend with recent price fluctuations. The support price consistently remains at $1.7, while the resistance has varied, currently at $1.97. The RSI values have mostly been below 60, indicating a generally neutral to slightly oversold condition. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper band, but generally remaining within a defined range. Considering these factors, my strategy will be a combination of trend following and RSI-based trading. I recommend a long position when the RSI dips below 50 and the price approaches the support level of $1.7. The entry price will be $1.7. The stop loss will be set just below the support level at $1.65 to mitigate potential losses if the price continues to decline. The initial target price will be the nearest resistance level of $1.97. To refine this strategy, I'll incorporate the Bollinger Bands. If the price touches the bottom band while the RSI is below 50, it's a strong signal for a long entry. In this scenario, enter at $1.87, set a stop loss at $1.8, and target $1.97. Conversely, if the RSI is above 70 and the price approaches the upper band, consider a short position. However, given the recent downward trend and the forecast predicting prices around $1.95 to $2.0, I will prioritize the long positions. The most efficient portfolio will be a 70% allocation to the long strategy when the RSI is below 50 and the price is near $1.7 and a 30% allocation to the long strategy when the price touches the bottom Bollinger Band with an RSI below 50. This balanced approach combines trend confirmation with volatility signals for optimized returns. Based on the historical data and forecast, Near Protocol shows a slight upward trend with some volatility. The RSI values fluctuate between 43.8 and 56.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show the price oscillating within a range, with the current price near the middle band. Considering the forecast prices are slightly decreasing, a conservative strategy is recommended. I suggest a long position entry at $1.86 with a stop loss at $1.82, just below the forecast low, and a target price of $1.88. This strategy aims to capture a small upward movement while limiting downside risk. To enhance returns, we can incorporate a dynamic RSI-based strategy. When the RSI falls below 20, which hasn't occurred in the provided data, a long position can be initiated. Conversely, when the RSI exceeds 80, a short position is viable. However, given the current trend and forecast, I recommend a long position entry at $1.85, with a stop loss at $1.82 and a target price of $1.88. This strategy combines the support and resistance levels with the RSI and Bollinger Bands to maximize profit potential while minimizing risk. The portfolio should allocate 60% to the long position at $1.85, 30% to a short position if the RSI exceeds 80, and 10% to a conservative long position at $1.86 with a stop loss at $1.82 and a target price of $1.88. Based on the historical data and forecast, Tezos shows a slight upward trend with price fluctuations. The RSI has been oscillating around the mid-level, indicating a neutral momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation followed by potential volatility. Considering these factors, I recommend a moderately bullish strategy focusing on short-term price movements. We will implement a three-pronged approach utilizing RSI, Bollinger Bands, and support/resistance levels. First, we will implement an RSI-based strategy. When the RSI dips below 30, indicating an oversold condition, we will enter a long position at $0.23. The stop loss will be set at $0.225, just below the support level, to protect against a potential downturn. Our initial target price will be $0.244, the resistance level. Second, we will implement a Bollinger Band strategy. If the price touches the lower band, we will enter a long position at $0.23. The stop loss will be set at $0.225, and the target price will be the upper band, which is $0.254. Finally, we will combine these strategies. If both conditions are met, we will enter a long position at $0.23, with a stop loss at $0.225 and a target price of $0.244. This combined strategy maximizes potential returns while minimizing risk. Based on the historical data and forecast, World Liberty Financial shows a slightly upward trend with price fluctuations within a defined range. The support price remains consistently at $0.0571, while the resistance fluctuates around $0.0582. The RSI indicator has been oscillating, recently showing an upward trend, currently at 48.9, indicating a potential for further price increase. The Bollinger Bands suggest that the price is approaching the upper band, which could signal a potential pullback or a continuation of the upward trend if the price breaks above the band. Given this analysis, I recommend a long position with an entry price of $0.0578 on July 29, 2026. A stop loss should be placed at $0.0571 to protect against a potential downside reversal. The initial target price is $0.0586, aligning with the forecast price for July 30, 2026. To optimize the strategy, I suggest a portfolio combining RSI, Bollinger Bands, and support/resistance levels. If the RSI crosses above 60, consider taking partial profits at $0.0582 and adjusting the stop loss to break even. If the price touches the upper Bollinger Band and the RSI is below 80, it indicates a potential for a short-term pullback. In this case, consider a short position with an entry price of $0.0586 and a stop loss at $0.059. The target price for this short position would be $0.0578. This combined strategy aims to capitalize on both upward and downward movements, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, KAITO exhibits a clear upward trend, consistently breaching previous resistance levels. The RSI values have generally remained above 50, indicating bullish momentum, with periods above 70 suggesting overbought conditions. The Bollinger Bands have been widening, reflecting increased volatility, but the price has largely remained within the bands, suggesting a healthy trend. Considering the forecast for July 24 to July 30, with prices ranging from $0.999 to $1.13, I propose a long position strategy. My strategy involves entering a long position at $0.999, coinciding with the initial forecast price and a potential retracement after the recent upward move. The stop loss will be set at $0.97, just below the support price of $0.995, to limit potential losses. The initial target price is $1.05, aligning with the forecast price for July 27. If the price reaches this target, we will consider moving the stop loss to break even at $0.999 to protect profits and potentially set a new target price of $1.13, based on the upper end of the forecast range. This approach combines technical indicators, support and resistance levels, and forecast data to maximize potential returns while managing risk effectively.